Hello, my name is Scott Judy, and this is assignment 3.3, a SWOT analysis on Lufthansa. A little bit about Lufthansa. The Lufthansa Group is an aviation group with operations worldwide that was founded in 1953. Currently it has over 138,000 employees, and in 2019, the Lufthansa Group generated revenue of around $36.4 billion. The Lufthansa Group is made up of multiple airlines and services, and it has different segments in logistics, maintenance, catering, and other business and group functions. All segments occupy a leading position in their respective markets. Conducting a SWOT analysis, starting out with the strengths. The first one is market brand. Lufthansa was ranked 9th in 2019 for top airlines in the world by Skytrax, which listed the top 100 airlines in 2019. So it has a strong market brand and presence. Next, it also has a large route network with 273 destinations in 86 countries served via the international hubs in Frankfurt, Munich, Zurich, and Vienna. And it's also a member of the Star Alliance, which consists of 28 member airlines offering more than 18,800 departures per day and connections to 1,300 destinations in 193 countries. The business performance. The network airline segment network includes Lufthansa German Airlines, Swiss, Austrian Airlines, and they're all combining together with strong market presence, and that makes up a large portion of the revenue. Another strength is it's backed by the German government. When COVID hit earlier this year, a lot of aviation or the transportation industry was pretty much shut down. While Lufthansa being served under Germany, the German government provided a $10 billion bailout in exchange for 20% stake in the company and 2 seats on the board. So a strength is the government sees that it's too big to fail and it's going to help it out in hard times. Hopefully everyone will recover, not just Lufthansa. A weakness, liquidity position. Limited cash on hand to fund opportunities or fulfill payout obligations. Okay, everybody's in a tight pinch, and the liquidity is they just don't have as much cash as they would like to. Another weakness is operating performance. Its operating margin is lower than competitors, 7.8% versus the next competition, close competition, 11.8% and 15.1%. So there's some operating performance and efficiencies which can be gained, because in this industry, the money can be tight with all the operations and the fuel, which I'll come and speak about in a second. So the susceptibility to fuel costs, that's another weakness. Increased operating expenses, mainly being fuel costs, have jumped from 2.4 billion to 4.2 billion, which is the cause of the overall decline of net income. Net income has dropped from 2.36 billion to 1.21 billion in 2019. So the fuel costs started rising a few years ago, and even though the income, the revenue was up, the net income was down. Now, again, with COVID, the fuel prices have bottomed out, but they're starting to recover, and that's just a weakness. Until we get some more efficient airlines, the engines, efficient operations, some other business opportunity or network to try and be so susceptible to these changes. The pandemic. Okay, the pandemic reduced travel. It shut down the transportation industry. At the height of COVID in April of this year, air travel was reduced by 96%. Attempting to reduce cash burn to 470 million a month this winter from 587 million a month presently. Management is saying that with its prediction that it will return to positive operating cash flow sometime in 2021. Okay, so weakness is just the segment that it's in. Um, Again, going back to those efficiencies. Now, there are some good projections and opportunities available. First one is growth in traffic volume. All these numbers were prior to COVID, and after this hopefully is past us, then we can start seeing the recovery and growth again. Over the next two decades, the forecast anticipates a 3.5% compound annual growth rate, leading to doubling the passenger numbers from today's levels. The International Air Transportation Association revealed the present trend in air transportation suggests passenger numbers can double to 8.2 billion in 2037 and 1.1 billion airline travelers in 2019, up 3.9% the previous year, 9.1% over the 2 years prior to the pandemic. So over the last 20 years, the air passenger travel has consistently grown, minus this short period in the recession time frame of 2008, 2009. But again, this trend will continue, and passenger levels are foreseen to double over the next couple decades. That is a huge opportunity for Lufthansa to take advantage of. And two areas that Lufthansa can do this is expansion of the route network. So that's another opportunity. India's air travel sector estimates that air passenger numbers to and from and within India to increase by 3.3 times over the next 20 years to more than 500 million passenger journeys per year. That's just in and around India. That's a huge opportunity. China has the largest growth in passenger journeys in 2018. In 2019, around 660 million passengers traveled by air in China around that area. So Asia is a huge opportunity for Lufthansa, and the growing largest segments within Asia, you have China and India. Threats. Regulation in the airline industry. You have all these different regulation industries from different segments from the United States, European Union, China, India, Japan, and those could be potential threats because Lufthansa has to comply with all these different regulations as it travels in and out of these airspaces and countries, which trying to comply more rules equals more costs for the company. So that's something that will probably continue. Nothing drastic is on the horizon, but that is something that always could be a potential threat. The next one is foreign currency fluctuations. 37.8% of its total sales are from non-European customers in 2018. So again, with the economies that are way that they're going, you have the ups and downs. That could be a potential threat. And then also you have intense competition. The European Union is home to 135 scheduled airlines. America has 59. The 5 biggest carriers in America control about 70% of the market. The EU's top 5 barely hold half. So Lufthansa's main bread and butter is within Europe, and then it expands from there. Again, the competition is fierce with the pricing wars, and that is a threat. Continuing on with the fuel, you have the increased fuel costs and the susceptibility there. Fuel costs are expected to be 850 million higher than in 2017. Lufthansa added it previously projected its fuel bill for the current year to rise to 700 million, and that was in 2018. So they continued to rise up until the pandemic hit. Those susceptibility to fuel costs, increasing operating expenses, mainly being fuel, have jumped from 2.4 to 4.2 billion. Okay, so I explained this earlier, and which this could be solved by currently, due to the current segment, airlines are mothballing or canceling um, airline orders, but some restructuring. This could be an opportunity to restructure, and when growth is starting to turn around, get those more fuel efficient aircraft, because since 1960 the air transportation sector has become um, like 65% more fuel efficient. Now, those gains are monumental in the beginning, and they're making strides each time. But the difference between a current new operating aircraft and a 30-year-old aircraft, that adds up in fuel, operating expenses, maintenance, etc. These are my references, and that is the end of my presentation. Have a good day.